right.
All right. Welcome to everyone to our Elegy Modified Financial February Financial Month. We're educating our sisters regarding how to handle their finances and be good stewards, especially when it comes to our taxes. So I would like to start out with prayer, but we welcome all of you all. We're glad you come to hear, and we're going to pray, and then we'll introduce our speaker. And as other ladies are coming on board, we know that we're glad that everyone is here to learn and to support and encourage as ask lots of questions. So let's pray. Father God, I thank you and I praise you that you're the great I am. I thank you for being so good to us. I thank you for your faithfulness that Lord you have called us for such a time as this. And I thank you for your goodness. I ask that you will bless this time together to be fruitful, that the questions that are given will be answered. And I thank you, Father God, for your faithfulness. And thank you for just being with us as we continue to encourage each other and work together in unity. And we trust you, Lord, that we will continue to excel and advance the kingdom of our Lord Jesus Christ. And thank you for our speaker. Bless her to continue to share and educate and encourage and bless her, Lord, as she's pouring out to us that we will receive. And I ask you to replenish her and bless her, Lord, as she go forth unhindered and unchecked by any outside force. In Jesus' name, amen. All
Amen.
right. Well, we're going to go ahead and introduce our speaker. Shannon Thomas is one of our eligible Dolphin sisters. She's a founding member of the Western University chapter. And she is one of those who you can call on with questions for taxes. She's helped me out, relieved a sister. But I'm glad she's here tonight to help us in our financial educational month. So we know there's several women of the eligible Dolphin that are experts in their field in this area as well. But we thank God for her coming forth, and as well as others. We, just from the InReach committee, we're glad to have her as one who is going to share tonight. So introducing Shannon Thomas. Take it away, Shannon.
Thanks, Janelle. So I want to go ahead and I'm going to share my screen shortly with a small presentation. But if you do have questions, I do have multiple screens going here, so I'll be able to see. So like if I'm talking about something and you want to get it answered, I'm going to be paying attention to the chat as well. I'll go ahead and share my screen. All right, can everybody see that okay? All right. All right, so today is, as you know, this is tax tips for individuals. There will be a separate tax session for businesses so that we can kind of have a micro focus for each different day. So just a little background about myself. It's not a full background, but as it pertains to taxes. So from an educational standpoint, I have my master's of accounting and financial management, which I attained in 2007. I've always enjoyed accounting. It's something that I've had a passion for numbers. Uh, and I started to get into tax maybe around 2009, where I really enjoyed it. And then I decided to become an enrolled agent, and I did completed that in 2013. So you might be wondering, what is an enrolled agent? Well, an enrolled agent is a designation that is given by the IRS. So in order to be an enrolled agent, you have to go through testing in all areas of tax, compliance, representation, planning, and the like. And then we go through a vigorous background check. I'm fingerprinted. I go through checks every year, suitability checks to make sure that I can still maintain this designation. So on the business side, I started a tax franchise business in 2011. And then in 2014, I went private and I opened up my own tax business. And inside of taxes, I know people mostly just think about tax preparation, but there's so much more to taxes besides tax planning. Hopefully, y'all won't know that side. There's a lot of dealing with getting people out of trouble. But I also do business consulting services as well as accounting work for small businesses and individuals. But tax is one of my passions. I really enjoy answering people's questions. I just love to put people at ease because there's like a little bit of cloud around taxes, and people think the IRS is like the all-seeing eye, like they know everything. They don't. But we'll get into how to avoid dealing with them in that way. So one of the biggest things that I know, taxes can be very touchy situation for people, especially since it pertains to our money. And so there's always this, should I do it myself or should I go to a professional? And I don't think there's anything necessarily wrong with DIY, depending upon the situation. It really is a case by case basis. Mostly now, I mean, you can still send in taxes in the mail. It's not recommended. I don't recommend it unless you're forced to. There are some forms in rare situations where people have to mail in tax returns, but that's only because the IRS is prompting you to do that, not because you're like, I want to take out paper and pencil. That's really not the way to go. It takes a very long time. Um, like days like today, like say we know we're kind of like in a government shutdown. Nobody's gonna open that mail. It's gonna sit on somebody's desk. It's just better to kind of use the electronic way. And doing it yourself, you have to be very comfortable using the computer, using the software, and of course, there's various tax preparation softwares out there. But I would recommend because a lot of times the reason why people do stuff themselves is because they want to save money. And there's nothing wrong with doing that if you feel confident doing that. But I would say you should definitely go to some reputable sites. One of them, which I want to show here, is the IRS uh, website. Can you see this page here, Latasha? Okay. So basically, what we're looking at here, you can go to the IRS and find out how you can get your taxes done for free. So this program, and I'm going to make this a little bigger just in case it is a little small. Uh, so the IRS does have a program where certain individuals can get their federal taxes, let me say that. Emphasis on federal, this does not include your state, your federal taxes for free if you use their website. So I'm going to click on this Explore Free Guided Tax Software. It'll bring you to an option where you can find a trusted partner, which will be somebody like myself. It'll actually give you a list. You can kind of put in your name, well, not your name, but I'm sorry, your address or either like your zip code, and it'll show you people that are registered with the IRS either by credential or their program. Or if you want to do the DIY, you can kind of go here. And so these are the partners that they use, okay, that they say we run our free program through. And as you can see, there's 8 different ones here. They don't have a preference for you. You can choose any one of these. And they kind of give you, like each partner gives you, what qualifies you for a free federal return. Some of them have free state returns. Some of them don't. It really just depends, but it kind of allows you to explore these programs here. And I want to tell you this, you want to make sure you go through the IRS website, because if you just go to TaxAct by yourself, it's not going to be free. And don't go, why isn't it free? Because you have to go through the IRS website in order for it to be free. You have to come on their site because they have these guided links, which will lead you to the free programs that each of these partners have set up. Okay, so that is one way for you to be able to do it yourself. If you still want to have like a free option, there is something called VITA or VITA. It's basically the volunteer income tax assistance. I do that. Basically, it's tax preparation that we have for people who want to come in person. It's kind of like the same thing, but it's with a professional, right? So you still have like, you're not doing it yourself. You can still get like a professional to do it. And I'm going to put in here for an example. Let me make this a little bigger. So get free tax help. You can put any zip code in here. I'm going to use the West Side zip code here. And basically, when I do that, I get all of these different places, tells me how far it is away from that zip code. This program, Vita, it starts every year. It just started actually today. So that's generally when it starts. As you can see here, some of these partners are starting at different times. So basically, I can go and see who's doing these taxes. It lets me know, like if I click further here, it'll let me know, do I need an appointment, where I can go, any other information. So this kind of way, if I'm looking to have like this free option still, because I might need it and sometimes you might, you can still feel like you have a trusted process because even going through here, even volunteering, they still make you test again. Like I have a credential, but I still have to take a test to make sure that I could, volunteer to prepare these tax returns. So that's another option. And then also, if you're looking for a person, so I'll say this: I know that we hear the term tax lady or tax guy, somebody's gonna give you a hookup or give you this money back. Um, Over the past 20 years, the IRS has greatly improved their collection process, and they have greatly improved how they track returns and fraudulent things like that. I will say if you are going to use a person, it is a good idea to make sure that they have a credential, and there's multiple credentials. So, like as you see here, you can be an attorney. We have attorneys that specialize in tax. You can be a CPA, an enrolled agent. There's an enrolled actuary, and that would be like for those businesses that need those people. And then they have an enrolled retirement plan agents. And then something that's common for people who don't have one of those other credentials is the annual filing season program participant. So what that means is they might not have a credential like a CPA, EA, or attorney, but they have been vetted by the IRS, right? They have to get continuing education because we all do when we have this credential. I have to do like 72 hours every 3 years. Um, we have to go through background checks. Most of all these people here have to be fingerprinted. So you're not dealing with criminals or people who are scamming, right? So that's very important because I know that over years we've all heard about different tax preparers who ended up, going to prison or whatever because they were scamming. And that's something you definitely want to stay away from. So I would just recommend that as you do that, especially as we all grow older, we all get more money, you want to make sure that the person that's doing these things, that they're able to be the appropriate people. So you can kind of go in here if you're looking like I want a CPA, I want a lawyer, you can kind of, choose what you want, and then you can put in your zip code and put like how far you're willing to travel if that's a thing for you. So I would just say when you're thinking about that, DIY is not bad, but you have to be prepared to go all the way, with it if you're going to do DIY. If not, you can definitely either use VITA and you might qualify for free assistance there or search for a professional. All right. So just kind of going into this new tax year, I want to talk about just some regular inflation adjustments. So these are things that we see every year. The standard deduction, just in case someone doesn't know what that is, the standard deduction is kind of like a free for all where the government says, okay, we know you pay some medical bills, you might have paid for some other things. We're just going to give you that deduction off of your money, you don't have to prove to us that you had, for example, a married filing jointly, $32,000 worth of deductions. We're just going to give it to you, right? And if you have itemizations, they need to be more, for example, married filing jointly than this $32,200. So in the past kind of 10 years, when they kind of brought on these higher deductions, they got rid of exemptions. Most people don't itemize that much anymore because they keep getting so high that you would have to have, all this mortgage interest and taxes, even though they did do some increases and they kind of, which I am glad that they went back to allowing us to deduct more real estate taxes more than $10,000, which is great. It kind of went up, but most people will end up using the standard deduction. So they only adjust it. It's always usually less than $1,000 per each year. We know they're not keeping up with inflation for real, but this is what they give us each year. So this is kind of like the differences between, last year and this year. And then also the same thing with the tax rates, the marginal tax rates that they have for money, and then also the alternative minimum tax, just showing you some differences between what has changed from the previous year. Now, just in general, for like some updates for the tax season, I know at the end of this last year, there were different acts that were passed during Congress. And some of the main points that affect individuals, which is good, is no tax on tips up to $25,000, which is really great because this type of deduction is above the line. And when I mean above the line, it's equivalent to your standard deduction. It gets the same type of treatment. So, say, for example, you made $100,000, and let's say you might have had $25,000 in tips, depending on what industry you're in. It's very common. You automatically get to take off that $25,000 in addition to your standard deduction. No questions asked because these are usually reported on the W 2 anyway, on the different boxes. And so that's really a great thing. And you don't even have to have a low income to use it. So, like for a single person, their modified adjusted gross income can be $150,000, which is relatively high. So, it's not just for lower income individuals, it'll reach like a lot of the general population. Same thing with no tax on overtime. It's up to 12,500 per filer. It's 25,000 when married filing jointly. This one can be a little tricky. When we kind of had that government shutdown at the end of the last year, they didn't get a lot of chance to update a lot of things. Um, One of the main things is the you might not see your overtime on your W-2. If you do see it, it should be in box 14. If it's not there, your job may have sent you something that letting you know, hey, this is the amount of overtime that we have for you. Or one of the better ways that you can use is kind of like your one of your last check stubs in December, right? So this will be a time where you might want to pull that check stub out to kind of make sure like how much overtime that I actually get. And again, this is akin also to the standard deduction. It's above the line. So you can actually deduct it just like the standard deduction. I've been seeing a lot of people use that because a lot of us may work, time and a half on jobs, very common. So you can definitely use that. Another thing is no tax on car loan interest up to $10,000. So this is for people who bought cars starting January 1st, 2025 and it's going all the way to the end of 2028. People not buying cars, y'all. We know they're not buying cars because it costs too much. So this is kind of like a way to kind of stimulate people buying cars because during this time period, you can deduct car loan interest up to $10,000. Kind of how you would go and look for that. If you're getting it financed, it has to be financed, obviously. And then it also needs to be a car that was assembled in America. And there's a way to find out if your car was assembled. And we'll get these slides out to you. We'll make sure we get these out. You can basically go to this site and you can put in your VIN and it'll tell you like whether or not your car was assembled or not. So that's the best way to find out if your car actually qualifies and it needs to be a brand new car. But if you do, because sometimes people don't think about that. I have to ask a lot of my clients, "Did you get a new car?" Like, yeah, I got a new car. Well, give me your interest statement. Let me see that. Let me see your monthly statement. So same thing here. There's another one which I really like. The additional deductions for seniors, $6,000. The seniors automatically get a higher deduction, but they got another bump. And believe it or not, a lot of seniors pay taxes on their Social Security because they had, yeah, Social Security. A lot of people are surprised that it's tax year. You never stop paying taxes. For the most part, people are paying some form of taxes on their Social Security unless they're receiving a small amount of Social Security and they're not receiving any other income. But this additional deduction is for seniors starting at 65. And it's at a pretty modest AGI 75,000. So this will help, excuse me, seniors that have more than Social Security income, where they have pensions or they have some type of investment, IRA or something that they have to get this money out. It's going to help them get some money back as well. All right. So one of the biggest things I want to talk about is this Trump account. And ignore the name. Let's ignore the name. I know he gave it his name, but this really is a good opportunity for anybody that have children under the age of 18. So I know they have been touting it as for babies that have just been born. It's not just for babies, y'all. It's for any child that is under the age of 18 as of this year, right? So if they're going to make an election, they have to be under the age of 18. So the thing about the babies is the babies that were born between January 1st and going to be born through the end of 2028, they get the $1,000 money from the government. But this is not a government run program, y'all. It's not. I don't know what brokerage houses they're going to use, but it is going to be privately done through brokerage houses. So um, they didn't say yet. I think they're working on which ones they're going to use. So what will end up happening if you sign up, and there's two different ways to sign up. So either as you're doing your taxes, you have these children that are under 18, you can decide, yes, I want to, have my child or children with this Trump account. And then basically, once it rolls out, because it's not going to roll out until July the 5th. Okay. I want to show something real quick. Just a second. I'm going to reshare my screen here about just to kind of briefly talk about it and some of the benefits of it. I'm just going to pull this up. So even though it's not officially open yet, they have a website, trumpaccounts.gov, where you can basically come here and you can put your email in. Let's say even you got nieces and nephews, grandkids, and you want to get this information out. Basically, what this Trump account is like an IRA for children, which I think is great because we can't start IRAs for kids. You got to usually people use irrevocable trust or something like that. And even then, those contributions are not tax deductible. I mean, they're not. Um, this allows taxes to be deducted up to $5,000. And I can definitely see this in the future as being a benefit from companies because your company, your employer can contribute money to this. I see this being something in the future that the employers would be like, as a benefit, hey, we'll give you, I don't know, $1,000 a year for your kid. Um, every year, we'll put that in the account and it's deductible for them. And so, as you can see here, if you have a baby or you just recently had a baby, you don't have to make contributions. You can just let that $1,000 grow. When the child turns 18, they can start to use the money, whether it's for school, to buy a home, to start a business. Um, I mean, the thing is, it is just like a traditional IRA, so you do get taxed on the earnings. They do. But they don't get a penalty for using the money at 18, as long as it's for one of those things, right? Going to school, they're buying a house. And I mean, if you look at this doesn't take over like 529 plans. They definitely still have a place where you put that money away and those earnings are not taxed when you use those for school. But this will kind of help with wealth building and being able to do that. Because I'm like, my children are not this young, but they are young enough to still be eligible for this. They don't even have to take it out when they're 18. What it does is it allows them to be able, so like, say I have three children that are still under 18. My son just turned 21, y'all. Can't believe it. He just turned 21 last Wednesday.
Wow.
So basically, I know, right? So basically, my daughters, they're still under 18. So even if when they turn 18, they don't have to use this money, they just get a jump start on their IRA, which the rest of us, we had to wait till we turn 18 or you got your job or whatever. They get to get it early. So that's one of the great benefits about it. And again, this is not being managed by the government. This is going to be managed privately. I wonder if they're going to let people choose what brokerage house is doing this. They probably won't, though. I'm sure they're going to lobby for who gets it. But they try to give you, estimations like, hey, if you don't contribute anything, this is how much money could possibly be there. And they're not looking for like risky investments. These are like low index funds that they're using here. This is really for long term growth. This is not like for something you want to see like grow in 5 years. That's why they're doing it when they're babies. So by the time, 18, 20 years later, if we're contributing, there should be like a lot of money in there to kind of help, grow. So I think what they're also doing, some of these companies are promising I know some of these people talking about they gonna give money to anybody that signs up. They need some tax deductions, y'all, because I that's the only way I could see somebody saying we're gonna give $250 to every kid. Like that's a lot of money. But some of these people are basically saying we want to get those tax deductions. So again, um, I would say, definitely talk to your tax professional about, hey, is this a good idea for me? What are some of the options for this? But I would say it's definitely good because kids, it's kind of hard to put money away from them. And a lot of times you're very limited. Again, there's questions on here for parents telling you who's eligible. Of course, you have to be a U.S. citizen. You got to be under 18. Tells you that you can contribute up to $5,000 per year per child. And it lets you know if funds are going to be looking at long-term growth, so nothing very risky. When the funds can be used as early without penalty as 18, they don't have to use it. You basically are the custodian for them, the kids. They say, I guess you can set up something for the kids so they can look at their little money growing. It's a good financial education and let them, and when they turn 18, I believe it automatically transfers over uh, to them, or maybe not. I'm sure they'll probably have some things set up for that. But basically, that's kind of like where it's at right now. So right now, even if you filed your taxes already and you're like, man, I didn't know about that, you can still sign up for it in July. So it's not over. It's just like the tax return just kind of, and it's form 4547. It kind of just lets them know like, hey, I'm interested in it for, these children or this child. And they'll get you some more information out. And I'm sure there's going to be much more because they're still finalizing like all of this. For instance, we don't know who's going to hold the money. Let me make sure I didn't skip anything. Okay. Another thing I want to talk about is the importance of tax planning and estimated taxes. The W-4, I really hate that they changed it 10 years ago. Remember when we used to just to put like one, two, three, four, five, whatever, right? They ask you how many people are you claiming. They don't do that anymore. And I found since they've done that, people have been owing more money because the form is not necessarily straightforward. It may seem like it's straightforward, but it's not from a tax perspective. And I would say if you're in a situation where it seems like you're always owing, no matter if you're filing single or you're filing jointly, you definitely want to take a look at your W-4 election, and you can always change that whenever you want. So it's not like I know when we first get hired onto a job, we fill that out and we probably never look at it again, right? But especially as you're having children, let's say you're getting married, you need to revisit that form and you need to revisit it with someone who can do tax planning with you to let you know, hey, even when you get raises, right? It doesn't take a lot to go over into a tax bracket, especially from that 12 to 22%. You don't have to make a lot of money. You could be at 39,000, go to 60,000, and your taxes jump 10%. And that's not really that high. So I would say, just like we kind of go to the doctor and we go and check in, it is confusing Tuesday. That's one of the main things that I get questions about from my clients all year. Or they'll be like, hey, because I always tell them, you get a new job, call me. They give a new job. I'm like, let me see that form. You talk about the form because what ends up happening is they'll be like, they'll blame the job. It really ain't the job fault, but they'll be like, well, the job, I ain't fill it out that way. And a lot of times they did, they just was answering it truthfully, right? Like the form will ask you, are you married? You'd be like, yeah. But see, you don't need to get taxes withheld as a married person because you and your husband make too much money. So y'all need to be taxed as single individually. It's stuff like that where you like, huh? But I'm married. You got kids? Yeah, but you make too much money and you don't qualify for any child tax credit because you're over the threshold. You wouldn't know that just off the top of your head. So you're like, well, I'm married. I got dependents. And then they might have took out $4,000 too less. And then when you get to your tax professional, because I look at people W-2s all the time, I look, what happened? They be like, what? I'm like, you didn't, why you only got this much tax withheld out? And they be like, I don't know. And that's another thing too. I know that we're so used to working at our jobs. A lot of us don't look at our paychecks. I don't know why, because I always look. I don't never trust. I'm sorry. I don't trust them. I be looking every time trying to make sure, like, did they do this right? Did they miss some hours? A lot of times you can see, like, you're not withholding no tax. If you see that you only getting $2 taken out, you need to go back to payroll and say, why am I only getting $2 taken out? And they could tell you, well, you said you exempt from taxes. Like I did. Oh, I forgot to change it back. And be careful about doing that too. I know people do that all the time. Just be careful about that. But there's also, let's say if you're a DIY person and you're like, you don't want to go to a tax professional, there are multiple calculators out there, like as I was saying, as you're, you know, getting raises, getting new jobs, making, God giving you this increase, you want to check and make sure, like, how is that going to affect me in the long run? So this is the tax IRS calculator. They're telling you right now, the One Big Beautiful Bill Act, they're still updating their systems from this because, again, that last little couple months for the government shutdown put them behind a little bit. So they're still updating to change how this affects different dependent credits and deductions. But normally, they'll update that soon. So as we're looking for 2026, this tool is a pretty comprehensive tool. This isn't the only tool, but their tool is very comprehensive. Like they will literally have you sitting down here with your check, have you put your stuff in and telling you based off of what you're saying you make or what you're anticipating making. Let's say even if for those who might even be making withdrawals from their retirement plans and things like that, if you have a year where you're like, I'm about to buy a house, I'm about to do this, and I'm going to take out a large sum of money, you need to go see a tax professional, or you need to use a calculator at a minimum to see how much taxes are you going to end up owing. So you're not at the end of the tax year in April 15th talking about you owe $12,000. And you like, why? What happened? So using these free tools will kind of help you plan for when you're gonna make, big purchases or things like that that can affect your taxes. And then of course, it's always good to find a tax professional to help you with tax planning. Just like you found a doctor, we don't sell, you know, prescribe things all the time. There's some things you need to go see the professional for. And if you have some big things, you should reach out. And again, you can use that tool on the IRS website where you can search up tax professionals. So one of the last things I want to talk about is letters from the IRS. This is kind of where the part that a lot of people don't know about unless they kind of get in this situation. This is like big business for the IRS, right? And it's a very big part of, as an enrolled agent, a CPA, and attorney, we do representation. So even though the IRS itself is not a court, you have to present to them like a court. So, for example, um, so like this is where it goes into making sure the tax preparer that you have is authorized to help you. Because what can end up happening is you have somebody, they might be good at taxes, right? They might have been doing them over the years, but you get a letter, they can't talk to certain people at the IRS. They don't have any authority. And the reason why I say authority is because they cannot be an authorized representative. They can't talk to anybody, even if they did the tax return, because they're not authorized. So you need a enroll agent, a CPA, or an attorney to even talk to certain people in the IRS to help fight for your issue. And so that's why it's important too to make sure now that you get somebody that has that type of credential. One thing I don't want people to forget, and a lot of people don't know this, the IRS is a collection agency. They're just a bill collector. Um, I guess it's nice that they don't have to say that. If you ever talk to one of them, they don't have to say, this call is being recorded. I'm a bill collector and anything you say, but trust me, anybody you talk to, they are not your friend. That's why you have representatives like myself or someone else, because anything you tell them, they're going to use it against you. They don't even have to tell you that's what they're doing. But that's exactly what they do. So, yeah, they're the biggest collection agency we got in this whole United States of America, and they got the most authority to be all in your business. And that's the one thing you don't want them to be is in your business because they will get all up and through that business. Okay. I've had to have clients, when I represent them, like say they owe, and I represent people who've owed like almost $1 million, y'all. And these is regular people. They not rich. They really not rich. They just people who let the letters get away from them. They try to hide. They be living off the grid, y'all, for real. because they done got so scared by the letters. The IRS uses very extreme tactics. They lie, y'all. They'll send you something that's wrong on purpose. It be wrong. The numbers are wrong, everything, because they want you to contact them. Uh, and you wouldn't know that they're wrong unless you have a professional. Just like they just that's not right. You're not gonna owe that or whatever, whatever. So definitely, if you get any letters, you want to answer them. If you don't understand them or you feel like I'm in over my head, then you definitely want to reach out, find a professional, someone who can represent you before the IRS, so that those letters don't go unanswered. And always file your returns. I don't care if you owe $50,000, file that return right away because the IRS debt is not forever. I want to repeat, it's not forever. It's just like a credit card bill. So they get 10 years instead of 7. But the time doesn't start until you actually file the return. So if you file a return 5 years late, that's when the time started, not 5 years ago when it was due. So like all of the rules are made for the IRS's advantage, right? So even if you can't pay, you always want to file because you want to make sure that it's a whole system, it's a whole rule thing. It's like very complex for no reason, but that's why you do need professionals. So if you ever in this situation, if you're getting letters, and even if you're like, I can't pay, there are ways to get around, not having to pay large sums of money. There are different things like that. So I want you guys to make sure and never ever get in a situation. If you are, the sooner the better. Don't let them get in your bank account. Don't let them get in your paycheck because they will. So that's not to scare you or anything, but I want people to take it very seriously because I have seen people who have like altered their lives. I'm telling you, they be living off the grid, y'all, for real, like for real, and it's really bad. It's really bad. It ruins people's lives if you let it get that far. But that's kind of all that I have for my presentation. I did want to make sure that I have a question and answer section, but I know that we don't want to record that because people might have private information. So that's the end of my regular presentation.